So welcome everyone for today's event on green public investment after COVID-19. I'm very pleased to host three excellent guests today. Elena Flores, the Deputy Director General of DG ECFIN of the European Commission, is here with us at Bruegel in Brussels. And we have Louise Scoupeuil, who is the head of the International Economics Division at the Ministry of Finance of Denmark, and Laurent Zilberberg, who is the chairman of the European Long-Term Investors Association, and also senior executive vice president in charge of public internationals and European affairs, Caisse des Dépôts Group. The topic today is especially relevant, and the Russian invasion of Ukraine and the energy crisis we are currently facing makes the issue even more topical, because European Union countries set very ambitious climate goals. First of all, reaching net zero emissions by 2015, but also reducing 55% of the 1990 emissions by the end of this decade, while the Russian invasion of Ukraine made energy security a much more critical issue, which also accelerates the green transition process. The European Commission just came out with this so-called REPowerEU, which also foresees front-loaded or even additional investments needed to decouple from Russian energy sources. If you look at what kind of investment is needed to meet the climate goals, there are various estimates, also by the European Commission itself, but also many other agencies. And the typical estimates are more or less the same, suggesting that about a 2% of GDP additional investment would be needed annually, in each year annually, to meet the climate goals. And this is a major effort. Certainly this will be shared by both the public and the private sector. And the bulk of it should be made by the private sector, but it cannot be, everything cannot be done by the private sector, and the public sector will also have a major role. Now, a major discussion is what the share could be between the private and private, and in fact I would be very happy if the three speakers today would share their views on that issue. Nevertheless, we see the limitations what the private sector can do. For example, there was a huge energy price increase recently as a consequence of the Russian war. And from the perspective of climate change, as an economist, I have to say I very much welcome that, because the much higher energy prices will encourage everyone, both the public and private sector entities, to reduce their consumption and to switch to more green energy sources. Yet what we have seen is that governments throughout Europe rushed to dampen the energy price increases and offered across-the-board support, so not just for the poor people, but for everyone, reducing energy prices. Again, I think this indicates the political feasibility of having higher energy prices and higher carbon taxes to incentivize more private investment. So all in all, we think that the public sector has to have a major role in financing the green transition. And the big question, where does this money will come from? Because sooner or later, the European fiscal rules will be reactivated. And after that, almost all countries, I think there are only 3 countries in Europe which will not have to do a fiscal adjustment. I think Luxembourg, Sweden, and perhaps Denmark. But all other countries will have either a budget deficit which is higher than 3% of GDP, or if lower, then the so-called structural budget balance will not yet be at the level, at the so-called medium-term objective level. So 24 EU countries will likely have to implement fiscal consolidation, and it will be extremely difficult to increase public investment at a time when fiscal consolidation will have to be done. So the big question is what has to give. Either we will do fiscal consolidation and member states will do less investment, or perhaps we try to amend fiscal rules, or we perhaps try to invent a new European Union climate fund. So these are the questions I would like our three panelists to discuss today. As some of you know, at Bruegel we had a couple of works in which we suggested that a so-called green golden rule would be a useful addition to the European fiscal framework. That would mean that the net increase in green public investment would be exempted from the fiscal rule requirements, and therefore it might provide incentives for governments to undertake these investments, even at the time when they have to consolidate budgets. But there are also other suggestions, like a European climate fund, similar to what the Next Generation EU has done, but maybe at a larger scale and for a much longer duration. So there are a couple of options. So I would like now invite the three panelists to share their views in about 5-6 minutes as a kind of initial remarks. And then we will have some discussion, and also we would very much like to hear from you, both the people who are here at Bruegel's event venue, and also people who are online. I will be monitoring the questions from online. So please go to Slido and ask your questions. So first let me invite Elena Flores. So could you please share with us your thoughts on how public investment will happen in the coming years for green transition?
Thank you very much. Thanks to invite me here. It's really a pleasure to come back to Bruegel after quite some time. Have been here in many different incarnations talking about fiscal, about China, and now about investment. So but it's always very stimulating. So I can say that I fully share your questions, but that's easy to share. Now what is more difficult is to find the answers. And I wanted to take a bit of a slightly different angle, and we can come back with the questions to the fiscal framework, etc. But as you know, the EU has had these very ambitious climate targets, and we have put in place also a policy package, which is known by the Fit 55 label, which is a combination of many things. Some of these measures are carbon pricing type of measures. There are also regulatory measures, etc. That I wanted to say that because this is one element of the response. It's not only about money, but also about having the right incentives and the right framework. In addition to that, today what we have seen is that the need to really deliver on these challenges is only more important now, given the current crisis in which we are after the war. I mean, not after the war, but because the war. And in our perspective, that means that one should really be in a position to accelerate the transition, the green transition, and therefore the need for additional mobilization of financing. We have tried to, in a way, think about what could be done with the instruments we have today. And that's the purpose of this recent proposal that we call REPowerEU, that in a way is, I would say, to use at maximum the financing capacity that we have under the current framework, but focusing it in the right type of investment that can be more having a greater impact for the transition right now, and in particular for reducing the energy dependency. And with this, indeed, I understand that your perspective, reading your blogs, etc., is a bit of the thinking about how public investment can be protected, incentivized, etc. And it's interesting to have some brainstorming about the golden rule or other possible financing vehicles. This is obviously very familiar to us. We have been having the similar reflections in the Commission, with maybe one additional step, this that we always ask ourselves, what can be done, what is actually feasible, or what has a chance to really be going through the political decision making and be implemented. And that's a bit more challenging, I would say. But we can come back to that. I wanted to point to a couple of instruments. One you already mentioned, which is the Next Generation EU, in particular the Recovery and Resilience Facility, because that's really an additional fiscal capacity for the member states. It's not replacing, it is really additional, and it is huge. And it is huge for the first time. And what is important, you all know that, but I wanted to point to that thing, is that this recovery and resilience facility, so that money goes to the member states in order to do reforms and investments that are linked. So it's not whatever reform and whatever investment is a focus on green investment, which this, I think it's 37% the target in the RRF that has to be devoted to green investment, and the reforms that are most relevant in order to accompany or to provide incentives for this green investment. So that I think it's very important to integrate that in the reflection about what could one do next, let's say, or in addition to that. And that's largely public investment, if not 100%. Part of it will be also co-financed with private sector, or at least that's the aim, to mobilize, let's say, additional private capital to go together with these public investments. But really the trigger and the starting point is public investment. And I think it's also important to say that the way we have constructed these programs with the member states, this will happen, because otherwise the money will not flow. So it is really an action-based financing capacity. And I think that's also important, to have greater chances that implementation will actually be there in the types of investments that have been agreed, and not something else. So that's really, I think, important. And indeed, the plans have gone even above the target in terms of green investment, most of them, if not all, of what has been agreed. In addition to that, in order to really mobilize also the capital towards the green investment, as you know, part of the financing on the Next Generation EU has been done through green bonds. This is, I think, also interesting to keep in mind, because that's there to mobilize funds towards this type of investment in particular, so very clear, focus and targeted. And in addition to that, I also wanted to mention as a last aspect here is the InvestEU program, which somehow is less known, but in that context of the discussion we are having today, I think is very important, because InvestEU program is basically using public guarantees, so ultimately, if needed, public money, but to leverage private investment. So let's say the relationship between the public money and the private leverage here, it's more or less what we have been calculating based on previous experience with EPSI, etc., is like 1 to 14 euros that one can mobilize with that. So in terms of amounts, it's less big than the RRF, but it is of a very significant amount of capital that can be mobilized here. And the two work together, because in the member states, clearly, both the international promotional banks and the national promotional banks that are the implementing partners of InvestEU are acting in the context of the RRF. So when we are looking together with the member states what is going on in terms of investment, we look at the whole picture, let's say, not independently one instrument from the other. And in fact, this InvestEU has a clear focus on green transition, which goes through, let's say, the 4 windows that the program has, which is infrastructure, sustainable infrastructure, innovation, research, etc., SMEs, and social investment. But across the board, there is a requirement of green investment, of a minimum amount of green investment and compliance with the green taxonomy, etc., for all the investments under this program. So I wanted to bring that because those are ways of really combining the public and private and trying to get as much as possible from a limited amount of public money in order to mobilize private capital, and also to be in a position, I think, with these kind of instruments, both RRF and InvestEU, to really provide policy steer for true. I mean, the investments have to be compliant with the policy priorities on the green area. And there is a full screening to make sure that this is the case. And it is, I think, very important because all these promotional banks, starting by European Investment Bank, EBRD, Nordic Investment Bank, etc., but also all the nationals that are now eligible for these programs, are going to work with this very clear policy steer. So that can be also a way to address the limited amount of public investment, in addition to the topics that you raised about fiscal framework, do we need to change, etc. I can come back to that if there are questions of this to share a bit our views if you wish after. Thank you.
Thank you very much. Elena, just let me have one quick follow-up question. I mean, I really appreciate that you mentioned Recovery and Resilience Facility and NGU and all the other programs. My little bit critical question is that the Recovery and Resilience Facility is very much, I mean, distributed towards Southern and Eastern European countries. And indeed, I think in these countries, it provides most, if not all, additional public investment needed, at least in the next few years until the RRF is in operation. But in Western and Northern European countries, I mean, those countries receive very little in terms of the GDP from the RRF, and it contributes in a very little to the additional public investment need. So my fear is that yes, I mean, I clearly agree that NGU was a landmark instrument in the European Union, but it mostly addresses the problems in South and Eastern Europe, but not in Western and Northern Europe, which is the bulk of the EU. And I really wonder how more green public investment will be possible there.
Yeah, no, that's a good question. I would say that the instrument is designed in order to, it's not about equal distribution or typical key distribution, everything for all. Clearly the design of the instrument is based on where is the strictest restriction in terms of fiscal space. So it's normal that produces that effect, because other countries that receive less RRF money have more capacity to go with their own fiscal policy because they have less weight in terms of debt sustainability, etc. So by design, the instrument wanted to address that. So it was not only an instrument designed to finance green investment everywhere, but particularly to allow countries that have much less room of maneuver to go to be up to the ambition in terms of investment. Again, probably if you look at how InvestEU is going to be activated, we are at the very beginning, but I could imagine that you would see the opposite, where the first programs are being put in place and banks being active, etc.
Yeah, thank you. Good point. Now let's turn to Louise Scooby, who I think will have also a PowerPoint presentation.
Yes, that's right. I don't know exactly. Can you see it? Yeah. Here it is. Yes, thank you very much for inviting me today to this conference. So in my short presentation today, I will try to cover these following questions that you also outlined in the invitation. So how can governments increase funding for green investment? Fiscal policies are facing several restrictions, and do we need to change the fiscal rules, and is there a need for new climate funds? So turning to the first question, let me start out by saying, as you also mentioned, that we fully agree that there is a need for fostering green investments in the EU. So how do we mobilize these investments when public finances are restricted by several factors, including the debt legacy from COVID-19 and the financial crisis before that, rising interest rates, inflationary pressures, and a possible recession around the corner? And in our view, there's basically two answers to the question, which is we need to mobilize private investment and optimize public spending. If we look at the share of EU public and private investment, we can see that private investments account for about 80% of total investments in the EU today. And therefore, it is a key driver of European growth and innovation. And with private investment, we can draw on the expertise and knowledge of the private sector while we avoid overburdening our public budgets. So ensuring, as I think, Elena, you also mentioned, incentives for green private investments is therefore very essential. On EU level, we think the reduction of the ETS ceiling and its extension to buildings and road transport is an important step in the right direction. And Further integration of EU capital markets is another important step. I agree with Elena. Also, you mentioned the green bond standard is important in this direction, and in general, further deepening of the single market could strengthen the climate and ecosystems which are key to green transition. Also, at national level, good framework conditions for investment are important, and they include reliable institutions and well-crafted regulation. As an example, I'd like to share with you, we recently made a green tax reform in Denmark here in June. And with this reform, we introduce a new carbon tax, which ensures that non-ETS companies are taxed with approximately €100 per ton of carbon emitted, while companies covered by the ETS are facing a tax of around €50 per ton of carbon emitted. And at the same time, we introduce an investment window which increases depreciation rates for green investments until 2030. And by increasing the future price of carbon and reducing the present cost of green investment, the reform creates incentives that will accelerate green private investments in the coming years and get Denmark within reach of our national target of reducing carbon emitted by 70% in 2030. So this is what we can do with incentives. And second, on efficient spending and prioritization within public budgets, we should ensure that funds are spent in areas where they make the greatest contribution to our climate objectives. So we should focus on the effects of various initiatives instead of on the amount spent and the size of expenses and investment. So in this regard, in the Danish Ministry of Finance, we're developing a green macroeconomic model to better measure the climate effects of our policies and in order to be able to identify what are the most efficient climate actions. Moving on to the second question on the need for reform of the fiscal rules to foster green investments. You also mentioned, Elena, this green golden rule that has been part of the debate. And well, we think a green golden rule will not be to our advantage, rather the opposite. It will open the floodgates for all kinds of other productive investments, including health, education, defense. So it's important that the rules continue to support national prioritization across all expenditures. We need to ensure room for climate action, but we also need, as the recent crisis shows, to prioritize defense, welfare, and so on. And in the end, all expenditures have to be financed, and to the financial markets, determine interest rates, debt is debt. And if we look at the debt reduction in the good times before the COVID-19 crisis, we didn't succeed in reducing debt enough. So we think a clever revision of the rules could help stabilize public finances and create fiscal room for supporting the green transition. It needs to be a revision that ensures a more credible reduction of high debt levels and less cyclical fiscal policies, which would make EU fiscal policies more fit for handling crises, meeting our climate needs, so that we ensure that we also have room for investing in the green transition when we're getting over the crisis. If you look at the graphs, well, you can't see this exactly on the graph, but with the debt levels we're experiencing today, we have some countries are having annual interest payments of approximately 3% of GDP. So if we think about how much we could do with this for productive investment in the green transition, if we got these debt levels brought down. So on the last question regarding the need for a new EU climate fund, I can be rather brief. Elena, you also pointed to some of the resources that are already there, and through the MFF and the Recovery Fund, more than 600 billion euro is already available to support the green transition. This is historically large amount, and in many countries, the contribution to climate investment from these funds alone corresponds to more than 1% of GDP. So therefore, the main task right now is to ensure a timely, appropriate, and effective implementation of these resources that are already out there. We do not need, by contrast, right now to be pumping out new public money in the current situation with capacity pressures and a high inflation. So this was my input.
Thank you. Thank you very much, Louise, for these very clear points on all the three questions. Let me also come back to you with two quick questions, and then we can continue more in the after that. So on the Danish carbon tax, you said that there was a political agreement. Just for clarification, can you tell me the timeline for the introduction of that? And related to that, do we have fears that if carbon taxes are higher in Denmark than elsewhere in the EU, then this might, lead to, I don't know, either competitiveness losses for Danish companies or Danish companies relocating to other member states? And on your second issue on the insufficient debt reduction, I very much agree with you that yes, it was insufficient before COVID, insufficient before the global financial crisis. But this is a status quo, and Denmark is clearly exceptional. It always meets fiscal targets and fiscal rules and always have sufficient fiscal space. But other countries don't. And when they have to decide, whether to cut, the salaries of public employees or to increase green public investment, the temptation to postpone green investment in favor of current spending might be strong. So if you could give a quick answer to those two questions, and then we can continue later.
Sorry, once again, could you just say the last question again on the debt levels?
So the last question, you said there is no need to change the fiscal rules, but my worry is that some countries already have high debts, and we are simply not able to do the green investment. So how these countries would be able to do the green investment if they already have high debt?
Yeah. So on the introduction of the carbon tax, I think I'll have to get back to you on that, as I'm not an expert on the tax reform, but it is towards before 2030 that we have to this is our climate target to reduce emissions by 2030 by 70%. So I think it is a gradual phasing in, but I have to get back to you on that. But what we also do is to incentivize investments right now to get the companies to make this transition by reducing depreciation rates for green investments. And it's also until 2030. So, and yes, on your other question on carbon leakage, you have for some companies, we have, for instance, some mineralogical processes that are within the EU ETS, but where we think that there are still some issues of leakage, and there we have a smaller carbon tax on these companies, but at the same time there are some make some incentives, for making them do this transition that is needed. So they can have a lower carbon tax, but only if they invest in the green transition at the same time. And then on debt levels, you're completely right that there are a lot of countries that where debt levels are very high, and we cannot. We cannot just say we have to go back to 60% right away. And what I meant to say is also that we think we can make a revision of the fiscal. We are open to make a revision of the fiscal, but we have to do it in a way where we do not relax the level of ambition, but we can make the rules more active and flexible, so that we could, for instance, allow for larger deficits in bad times, but with stronger demand for building buffers in good times, and we could make the debt rule more reliant on the business cycle. And we think we could make some adjustments to the debt reduction path in the rule to make it more realistic. But then also we need to ensure that a stronger enforcement of it.
Yeah, thank you very much. Now, last but not least, let's turn to Laurent Zilberberg. So could you please share your perspective on green investment?
Yes, thank you very much, and thank you for giving me the opportunity to give our opinion. First of all, I would like to clarify one thing. It is not because you are a public actor that you depend on public or fiscal money. The Caisse des Dépôts and much of the national promotional banks, they are public banks, they are public bodies, but they are not relying on fiscal resources. And they are relying for some on savings, for some on their own money that they accumulated in the years. So there is a difference to be made between public sector and public finance. I think it's very important when we'll have to discuss about the fiscal issue. And once again, for example, the Caisse des Dépôts is a very good taxpayer, around 3.5 billion per year in euro, and we do not receive any money from the government. Having said that, I would like to say that NPBIs are key actors for transition in general, and especially for green transition. It's not only an act of faith to say that, but it's based on 3 reasons. The first one is that we are robust. NPBIs are robust, and they benefit from a clear public support, from guarantee for some of them, and they act in favor of the general interest, and they have a sustainable balance sheet, as they are counter-cyclical, and in the coming crisis, I think that NPBIs will be more used than ever. The second reason is, since 2008, 2009, I did not hear anyone telling or saying, like Ronald Reagan, government is the problem and government is not the solution. I did not hear anyone saying that during the COVID crisis. And I think that, let's put it that way, that pure market demonstrated some limits, especially in 2008, 2009, including during the COVID crisis. And it is Elena which says that. I think we enter now in time of crisis. We had the financial crisis, finance crisis. We are in climate crisis, and now there is also the geopolitical crisis with the invasion of Ukraine by Russia. Therefore, there are 2 obstacles to be tackled. The first one is to consider green projects as having a priority over long-term investments. I do think that there are completely inseparable. If you have green projects but no long-term investments, then in the long run, you will have problems with the climate. And on the other hand, it is having long-term investment which do not take into account the green priority, which also is a mistake. And we need those infrastructure, we need those long-term investment for having a good and sustainable development. And the second obstacle is to try to implement a green transition and not at the same time tackling issue of inclusive and inequality aspects. If the green transition is considered by the lot of our citizens as something which is unequal, unfair, there will be no green transition because people will not support it. So if I want to be more specific about the role of NPBI, I would like to focus on 3 points. What do? We have to support and amplify the impact of national recovery plan. I already said it, we and PBIs are key actors in time of crisis. Because we have a deep pocket, we have the means to invest in long term. We have the ability to bear risk on our balance sheet and to act as counter-cyclical actors. Because when the context is positive, we manage in a positive way, prudent, and because of our size, we are able to act like that. Just to give you one figure, during the COVID crisis, between 2020 and 2019, in less than 1 year, the member of LT doubled their commitment in a single year. They doubled the commitment because, in terms of loans, in terms of equity, a number of loans, number of equities investment, but also in terms of total of funds committed. And what does that mean? That means that when there is a need for money to be mobilized, NPBIs are there, and this shall have a leverage effect on the sector. And it is very important. Just on the climate, in France only, there is a global finance, a global climate plan, and the French Caisse des Dépôts will deploy 40 billion euros between 2020 and 2024 to finance the green transitions. And there will be 3 priorities. Accelerate green transition for companies, but also for the territories. You cannot have it only for the companies. You need to disseminate it all over the countries. Second aspect is to finance the renewable energies. And the third one is to deploy green innovation solutions, to invest for new solution, innovative, and therefore risky, and I will come back on this a little bit later. The rationale is to provide complementary sources for funding, not only from the states, but also from the private sector. The second aspect is to participate on direct European fundings towards small-scale green projects. You know that the MFF, and Elena spoke about it, for 2021 and 2027, it reinforces the role of NPBI in the implementation of the EU budget. It's an important step forward as it acknowledges our role and legitimacy at the European and at the national level. And therefore, a lot of NPBIs are fully engaged in becoming implementing partners. We, on this aspect, we will help to funnel European funds directly to the ground and to the small and local project. And it is key if we want the green transition to be real, as the green transition cannot be only at the top. It shall be also be organized on the ground. And we can do it because we will share the risk. And the risk sharing is important because we are able to do it and to attract private investment and to do the leverage effect that is deeply needed. And last point is we act also to prevent greenwashing and ensure that investment is targeted as qualitative transition project. Money is one thing, but we know that it's not enough. The quality of project is key, especially when you speak about risky projects. Apart from ensuring a sufficient amount of recovery funds are channeled to the green transition, NPBIs also need to secure the quality of projects. And this is why it is important to have the technical assistance aspects. And for all of that, of course, and I will stop there, we support the European Green Bond Standards. We think that the development of blending and financial instruments are key if we want to educate and attract the private sector. Regarding the greenwashing, as we have a role to play as exemplary and also as a key actor when we do not support a project because it is for one reason or another look like greenwashing, it has an effect on the global market. Thank you.
Thank you very much, Laurent, for this very interesting introduction on what, first of all, on that you don't use public money, but act on behalf of the public sector by sharing risk and also describing the major goals. Now, just let me have a quick question on greenwashing, which I think is absolutely important. My question is that how do you assess whether this is the case or not, and how frequently you reject a project because you think that this is just involves greenwashing?
I would say that the issue on greenwashing is not to name and blame. The issue is to set the example. That means that when we are part of a project, other investors know that this is not a greenwashing project.
Okay.
And this is where, as we are, NPBIs are important actors. When I think about NPBI, I think about KfW, about CASA, and others. They are not part of any greenwashing because they cannot afford to be part of it. And on the second aspect, of we have the role of exemplary. And the second aspect is we are also having shares in the private sector. We can refuse, and it's not about greenwashing, but it can be similar. We can refuse when we consider that the remuneration of the top executive is excessive or whatever, and therefore we send the signal to the market and to the public opinion.
Thank you very much. Very, very clear. Would you like to come back? Then let me open the floor because we have 15 minutes left. So we have a couple of questions online, but first let me ask if people in the there are many hands already up. So then let us collect a few questions. So please first state your name, institution, and try to phrase your question very quickly.
Okay, great. Thanks. My name is Friedrich Lucke. I'm an economic analyst at the Joint Research Center of the European Commission, and my question is the following. I actually think that there is plentiful of money in the market that can be used for those investments, but I'm wondering, what does the EU Commission do in order to help member states in facilitating those investments by helping them reduce the legal obstacles and by helping recruit, for instance, better engineers. The former German Minister of Finance, Wolfgang Schäuble, for instance, said that many times the German government was financing everything that there was to be financed, but there were just not sufficiently many green projects projects that were well planned so that they could be implemented quickly, which often drives up the cost a lot, as well as local oppositions and legal proceedings that make those investments very costly. So I'm wondering what the EU Commission is doing in order to improve this in its member states.
Thank you very much. So let's collect a few questions, and then I give the floor to the panelists.
Thank you. My name is William De Catel. I'm an attorney at White & Case. I had a question on the EU's own resources, and particularly about the carbon border adjustment mechanism, where there is a proposal by the European Commission to use the resources from this new carbon levy. That's about $1 billion a year. And then we recently saw the European Parliament saying that it should be invested in least developed countries. I know these negotiations are now going to start, and maybe that's a little bit too detailed, but just in general, a question, is this a new trend that the EU is more going to collect its own resources rather than traditionally these would then be redistributed to the member states? For example, also in the ETS, it's the same proposal. So that's my question, basically, very quickly.
Thank you. There's also a question at the back.
Yeah. Claudio Baccianti, Agora Energiewende. One takeaway from this discussion is that we should start thinking about how the EU budget more broadly will look like in 10 or maybe even 20 years, because the Commission is setting, the European Union is setting ambitious goals and more ambitious policies in the future, and the RRF is temporarily some kind of addressing this need of more European money. But then my question is, what's the progress that we're doing now on the own resources? So the thinking on where to get the money in the future to fund these different ideas on, for instance, climate fund.
Thank you. One more.
Thank you, Mr. Chairman. Good morning, citizens. My name is Angelos Karlaftis, EPAFOS Advisors, who represent always the EcoWaves movement, the pan-European and Mediterranean movement, which is based in direct democracy, in science and in ecology. We just wrote to our followers in Facebook that we are very skeptical about the economic policies that are followed by us and our allies. Because here on the one hand we have the inflation. Also, we extended the credit lines by various ways. Credit lines, the quantitative easing, the meters we took during the COVID. And so we have the inflation, and on the green policies, we have the energy problems of the prices. Here, the measure is very good, generally speaking, but if we want to motivate the private sector, I don't know how we can motivate the private sector in such a loop environment, because here you are writing, the reporter of the Bruegel is writing, the investments will have to be funded. While most investments would be funded by the private sector, a large share of the costs will have to be funded by the public sector, either as public sector investment or by incentivizing private sector investment due to network externalities, information, inefficiencies, or political economy realities. We are very skeptical, gentlemen. Thank you very much.
Yeah, thank you. And let me read one very interesting question from online, which about the REPowerEU proposes to skip the do not do significant harm principle for urgent REPowerEU investment in the Recovery and Resilience Facility. And the question is whether this is not watering down the principle. And the ultimate question, will investment be really green? So I think let's stay with those questions, and we have 9 minutes left, which will be tough. So if I can ask each three of you to talk for 3 minutes each, if you can. Try to address as many questions as you can, please, but very, very quickly.
Okay, thanks a lot.
Anna, please.
There were lots of questions on issues that I don't know much, which is these own resources. I mean, I know the generalities, but not sufficiently to really tell you something meaningful about exactly what are we going to propose when. I would say that with the CBAM, it's a little bit tricky because this will be, well, first needs to be agreed, then there will be a transition period. But after all, if you look at the purpose, if everything goes well, in the end, there should not be CBAM at all. In the end, I mean, if all the other partners do the right thing. So it is a sort of a transition resource, I would say, that I know that it has been argued in the package of own resources, but I wanted to install that because this is very much now also the discussion with this climate club idea that the G7 leaders agreed upon. It's really to push the others to do the right thing in terms of carbon pricing. But all that will take a number of years. So in the meantime, it can be really part of the basket. On the how to prepare good projects, because that's basically your question in short. I think that indeed that's one element that in particular on the InvestEU we have an advisory function that implementing partners like the Caisse de Dépôt and many others, they will do, and in particular to work out with the local investors to develop the project. So this is part of the program. It's not just money, but also the support in preparing the projects. And I wanted to add here the notion of the absorption capacity, which applies to any idea of new money, because we have already problems of absorption capacity in some countries of the current existing funding, and we have to make it right. So we cannot just be there with making sure that the money is spent. We need to make sure that the money is spent on the things we have agreed upon and in the right manner. So in terms of how much money one floats into the system, that's also an important aspect. And it is not that obvious. So that's why we have also these different priorities in the financial instruments to make sure that we direct the money to the places where we see there are holes that need to be supported by public. And that's what I refer to, the 4 windows. And just to give an example, for instance, we have in InvestEU a social window, because we see there that there are a lot of things to be done, as Laurent was saying, close to the local, to the really the small size aspects of the economy that are not really addressed by the big money, and this needs to be addressed through this type of directing and providing de-risking in order to do things that normally the investors would not do immediately. So just in very quick on that. And I think that another aspect that I wanted to mention here that is related to the questions as well is that indeed in terms of making the private money mobilized for the green investment, the development of the capital markets union is very important. That goes today very much under the radar screen because it looks very technical, but there are at least 10 legislative proposals underway, being approved and in the way of being approved, that are really critical to develop the capital markets union. So that's just that you don't lose sight of that, because that can make also a big difference. And last, two points I still wanted to make is that in addition of the total amount of public money available, I think now it's even more important than ever to really think about the quality of the public finances. And this is a very broad concept, but I think one needs to go to the nitty-gritty of what it is. And one element that Luis mentioned, it's about the investment impact. So the impact of the policies is really very crucial. And one can have a very different budget capacity only by looking at this, even with the same amount. And I think that's also something that we need to pay more attention, not just about the big rules, but also to that one. And last point, I think when talking about fiscal policy, it is also important to really talk about what, not how much, but what, because clearly our position now is to the type of fiscal policy response that should be put in place now is not the COVID type of, is not the overall support, etc., as it was the COVID type. We think it has to be much more targeted, etc., be more of the income type of support, not the type of price dumping, and so on, for the reasons you also mentioned. So just to throw a bit of other elements that are also related to the fiscal discussion.
Thank you. I very much agree with that. Luis, can you offer some answers to some of the questions you?
Yeah, I will also try. I also agree with, we need to make the right incentives in the financial markets, in the single market, in financial markets, for instance, with green bond standard, to finalize a deal on that. And also, in order to provide the right incentives, we need to set, for instance, environmental standards. We can do that in the single market. We can set environmental standards that will apply across global value chains, and in that way we can influence the green transition and the ambition all over. So I agree with what was said. We have a lot of public funds. We need to make the incentives in the private market, because there is a lot of money out there, and also, as Elena says, we need to prioritize with respect to the effects of the initiatives. It's very important, not the size. So I think we need to make more analytical work and model work on how to do that, so that we are sure that it's the right investment that we are putting our money in. And I also agree that we also need the public sector to step in. It's not that the public sector does not have a role here. It does have a role when there is a need for risk sharing, and here also public-private partnerships can ensure innovation. So I think that was my.
Thank you very much. Very clear point. Now, Laurent, you have just a few minutes left. I think you could focus on incentivizing private sector, and let me augment that question a little bit, because certainly your bank and also many other promotional banks and EU funds also reach a couple of companies, but there are also many companies which don't benefit from any state risk guarantee or any other state support. So how to incentivize those companies which are not reached by EU or national public funds?
I can give you one example for incentivizing. Just look at what happened in the north of Italy with the glacier melted last weekend. This is, I think, a good incentive for private sector to invest in green investment, because there is no planet B. So basically, I think that it's not a question of incentivizing, but it's also and basically a question of need. And the point on which I would like to say is we all say that there is a lot of money all around here. I don't know for how long, because inflation is back. So there will be a good aspect, because with inflation, time will have again an impact of money, a reward, and therefore you can expect that investing on the long term can gain more than investing on the short term. But the question is not there. We are saying for many years that there are a lot of money, plenty of money, but not enough good projects. Maybe we are not looking for the right projects. Maybe we are looking for projects with IRR which are too high. Maybe we are looking for projects which are supposed to be risky, but in fact they are not. Because when a project is risky, that means that there are some failures. So what I would like to say is we want and we do leverage on the private sector, but we cannot expect to have the same things tomorrow that we had in the years before. As Einstein said, we cannot solve the issue with the same solutions that we use to create those issues. And I think that we need to change basically our minds in the project we're looking at.
Thank you very much. It's a very clear point and a very nice closing of this event. So my last word is just to thank all of you Elena, Louise, and Laurent, and all of the participants in the room and also online. In fact, there were many other questions which came recently, but unfortunately we didn't have time to raise them. I think we had an excellent discussion. I hope we answered some of the questions about the uncertainty of green investments and transition in the future, but there are still many issues remained, also many questions on the online forum. So I'm sure that we will return to this issue soon. Again, so thanks very much for all of you for being here, and please please continue to follow our events in the future as well. So thank you very much. Thank you.
Thank you.
Thank you.